you have to position yourself as an expert in the market. And whether you are or not, and if you're an emerging sponsor, you may not, and you need to be, educating yourself so that you can become one. But if you look like one in the marketplace, which is online, and then you can partner with experienced sponsors that may have more of a track record than you, then that's good. That's what you're going for. Welcome, guys, to the Robinson Review Podcast, Life, Law, and the Pursuit of Wealth. I'm your host, Todd Robinson, and I'm so happy that you're tuned in today and you're joining us from wherever you're streaming your podcasts. And today what I'm gonna do is I'm gonna go through exactly what it's like to start a multifamily real estate investment company and the things that I do with my mentees and students to get them started right from ground zero through finding your first deal and closing your first acquisition, and even putting deals under LOI. And so I want to give a lot of game today. I want to give a lot of value to you guys out there, and I'm just going to go through. I mean, literally, I had this conversation with on onboarding a student yesterday, and what I do is when I work with students, I have them first fill out a goals worksheet. And the goals worksheet is really it's in depth, right? It's 10 or 12 pages. It talks about personal goals, professional goals, your why. Why do you want to do this? Why do you want to get on this journey, right? What sacrifices are you willing to make? What kind of goals are you setting for you financially, work-wise? How many doors do you think you need? What's your annual cash flow that you want? What markets are you interested in? What do you want to be known for? Right? Because there's a lot of different ways to get on a team and go and acquire real estate. If you got if you're part of a country club and you've got a lot of wealthy connections, then maybe you're just a capital raiser, right? Maybe you're just great at raising capital, and that works for you. You've got a good job. You don't necessarily want to leave your job, but you can leverage these connections to get on GP teams and create passive income and generational wealth that way. Other students are, they have a W-2 job that they hate and they want to get out of it, and they want to move into real estate investing full time. They have that entrepreneurial spirit, that fire in the belly that we've talked about before, and they really want to leverage that, right? And those are the students that I really like working with because they are insatiable. Like even today's a Saturday, right? I'm filming this on a Saturday from my home studio, and I get a text from one of our students, "Hey, who can review an LOI for me?" Boom, love it. That guy's going to crush it because he is putting in the work, and he probably can't turn it off like I can. So I want to dive into what a typical 90-day launch plan looks like. So when students come into the program, what they do is we do the goal setting worksheet. And then from that, I create personally a curated 90-day launch plan that tells you exactly what you need to do to get from A to Z, right? And it's up to the students to really execute. And I just want to provide this value to everyone out there listening, right? And even if you don't join my program, that's completely fine. But you should take these steps anyway if you want to get involved in real estate and be known as someone who purchases real estate, who can attract investors, that's known in the marketplace, that gets those calls from brokers on those off-market deals, and can build a real estate investment company. My personal goal, right? My audacious goal is to build $1 billion real estate investment company. Now I'm building that alongside my law firm. That's my real estate investment goal. My law firm goal is to build, I'd say, 100 lawyers. Right now we're at about 13, and I want to have offices in New York, Florida, Texas, and California. A couple reasons for that. One, I like those markets. Two, I have organic contacts, client contacts in all of those jurisdictions, right? So you grow into a jurisdiction that you have existing contacts. It makes it a lot more easier to get referrals, to get references, and to kind of make initial connections with people. So that's my audacious goal for the law firm. And then for multifamily deal makers, the sky is the limit. But I want to help thousands upon thousands of emerging real estate sponsors and even existing sponsors grow and scale their real estate portfolio the right way, the legal way, with the legal guidance and the legal backing of someone who actually knows how to close deals and knows how to get the deal across the finish line, right? Ideally, long, a couple years from now, we'll probably be doing in-person events. We'll be doing live events all over the country. We'll have regional groups and chapters that will foster that entrepreneurial action-taking mindset that is going to be a distinction of multifamily deal makers from other courses and other mentorship programs, because there's a lot of educational programs out there, but are there a lot of action taking programs, right? You can take somebody so far, you can give them all the education in the world. They can learn, till they're blue in the face. But when it comes down to putting pen to paper and actually doing it, and having the guidance of someone to say, okay, this is what you need to do next. Go do that, come back to me, and we will go to the next step together. So with that, I want to explain, what is it like to jump into a 90-day launch program? And I want to go through what exactly I went through with a student yesterday and just give you an idea. So phase one is the foundation building phase, right? That's really days 1 through 30. And the first 30 days is really about just developing a credible and professional investor brand, right? There are so many real estate investment companies out there. What is going to attract investors to your company, right? How are you going to do that? And second of all, how are they going to find you, right? You got to be present online. And the student I worked with yesterday said, I'm kind of a private guy. And I get that. And you can, there's a lot of billionaires out there that are private you don't know anything about. But this day and age, you want to raise capital, you want investors to know who you are, you've got to build a commanding online presence, right? Because you need to position yourself as a serious capital partner. And the only way to really do that is through social media and through having a website. I mean, that's pretty no-brainer, right? But a lot of people don't realize that, right? This particular student didn't even have a LinkedIn profile. You need to have a LinkedIn profile. It is the first social media tool that investors, clients, vendors, you name it, anybody you work with goes and looks at. I have a LinkedIn profile, obviously, and people view my profile all the time that I'm working with, or that I've had contact with, or I've been in touch with. So if you don't have a LinkedIn profile, then it's hard for people to find you and hard for people to take you seriously. So that's the cornerstone of every professional real estate investment company, especially in the syndication marketplace where you're trying to take funds from retail investors. So that's number one. Number two is you want to develop a website, right? And all this kind of has to flow together. And when you're thinking about your website, you got to think about brand colors. You got to think about color palettes, typography. What do you want to be known as? How do you want to present, right? Is it sophisticated? Is it authoritative? Is it professional? Is it, really, it should be all those things, not really anything else, but it all has to flow, right? And that color design needs to flow throughout your businesses. And this is really kind of weeks 1 and 2, right? So key action items: create the concise investor narrative, value proposition, and highlight analytical strengths, trustworthiness, strategic thinking, right? These are buzzwords that your investors are going to want to see. They want to know that you're legit, you're professional. And that's the other thing. That's the other thing why it's important to do this, because you have to position yourself as an expert in the market. And whether you are or not, and if you're an emerging sponsor, you may not, and you need to be, educating yourself so that you can become one. But if you look like one in the marketplace, which is online, and then you can partner with experienced sponsors that may have more of a track record than you, then that's good. That's what you're going for. So last thing before we go into weeks 3 and 4, you need to obviously have a name for a company, right? What's your name for and this is your holding company, right? This is your holding company. This company is not necessarily going to have assets, but it's going to be your branding. It's going to be the branding toolkit that we'll put deals under contract with, that you'll have a website with. It'll be your brand for your investor portal. What is that name? This particular student yesterday, he had a name for his company that was based on his kids' initials, and it was perfect. And that leads to, again, conversations with investors. Well, why is your name of your company called Mel Capital Partners, for instance, or Elm Capital Partners, whatever it is? And see that, well, it is, I'm doing this for my kids, right? I'm leaving a legacy here. And so this is why I named my company X. It leads to those conversational openers, those icebreakers that are very important when you're networking with people. I work with a guy in Cleveland who's a firefighter, and we named his company Fireproof Capital Partners. And right, and it's a great play on his experience as a firefighter for 30 years. You know, fireproof is almost like, he's protecting the capital of his investors, and it's fireproofed, so fire can't touch it. Those kinds of things, those play on words. That's the kind of stuff I really look for, and work with students on how to develop that brand identity, because I'm a very big believer in what I call make the most of your assets. And your assets is your experience, right? You may not have a track record right now, but you have experience, you have life experience, and you can take that life experience and you can leverage it to get to the next level, right? I'll give you a great example of how I did that personally. Before I went to law school, I think I've mentioned this earlier, I had a bachelor's degree in social work. I was a social worker, right? 180 degrees from law, from, commercial real estate, finance, and investment expert, right? 180 degrees away. I worked in the social work field for 5 years, right? I had a career. And I could have, elevated that career and gone into management. I was already in management, but I could have gone further, would have made peanuts compared to what I make now. But I was an expert in child abuse and neglect at that time. And when I went to law school, and when I was getting into Emory, they have what's called the Child Barton Law Clinic, and it's a clinic for juvenile delinquents, I guess, or juvenile justice program. It's like it almost provides pro bono legal services for juveniles. And so when I wrote my essay to get into Emory, I made it seem as if Emory was the only school in the country that has a juvenile law clinic. And I wanted to practice child law or child advocacy, basically legal advocacy. And I had all this experience doing that, right, with Department of Family and Children's Services. And I worked for the state, and I worked in various roles in the child welfare realm. And so when I applied to Emory, I wrote in my personal essay, this is the only school I can go to because this is exactly what I want to do. And look at all my experience, and you should let me in. And I didn't have the best LSAT score to get in at all. I mean, it was good, but it was not, there was much, much better, higher scores than mine. So Emory let me in. Now, I never talked to anybody in the admissions department as to why they let me in, but I find it hard to believe that connection between the history and my life experience till then, linking that to what they offer, and then making the argument that this is the only school that has this program, and you have to let me in because I can't go anywhere else. I can't practice this anywhere else. So they let me in. Did I end up practicing child law? Of course not. I wasn't even interested at the time I wrote that. I mean, I was kind of, but I just wanted to get into law school. So again, that's an example of I leveraged that experience, and same thing with the Cleveland firefighter, right? We leveraged his experience as a firefighter to create his real estate investment company, and then make that story that is good for talking to investors, right? Oh, Fireproof Capital. Why is it called Fireproof Capital? Right? Well, I've been a firefighter for 30 years, and I've protected, thousands of people in Cleveland from fires, and I'm going to protect your capital the same way. Something like that, just to give you an idea. So that's weeks 1 and 2. Now, week 3 to 4, and again, this is even before you talk to any brokers, before you make any outreach. You still got to position yourself, right? We're still in the positioning phase. So position yourself. Weeks 3 and 4, you need to come up with some CRM. What's CRM? Customer relationship management software. There's a million out there. You can Google it. If you don't want to pay for anything, just use an Excel spreadsheet, right? And that's going to track meticulously everyone you speak to, potential brokers, potential investors, potential partners. It's the central nervous system of a capital raising and real estate investment operation. Okay. It tracks when's the last time you talked to this broker at this company, right? When's the last time you talked to this investor? What's this investor's birthday, right? Let's put that on our CRM because we sent him a little birthday card. He'll never expect it, but God, it's going to mean a lot, right? So But again, if you don't have the money to buy that right now, then just use an Excel spreadsheet. You need to have something thinking about how to position yourself to gather that information. So by the end of week 4, that's about the first 30 days, you've got a professional email address. Oh, I didn't mention that. Along with your website, you must have a professional email address. 100%. People will not take you seriously if you do not have a professional email address. And I've experienced this firsthand. I had a client, I was making a connection to a family office, and the family office was going to invest millions of dollars with my client. And lo and behold, he calls me and he says, this guy has a Gmail address. He can't even take his own company seriously enough to have a professional email address. I'm not working with this guy. Dead serious. Dead serious. And so it's that important to have a professional email address. I'm sure there's people that will say, no, it's fine. You can work off Gmail. From my experience, you can't. So you need to, along with creating your company, creating your email address and your domain for whatever capital company you want to have, get an email subscription. Very important. Build your website. Now with website building, I built my website, Iron Street Capital. Go ahead and take a peek at it if you want, through Manus. It's an AI tool owned by Meta. It built it in literally 5 minutes. It was very easy, and I paid a lot less for the subscription than I would go hire a website designer. So keep that in mind. And then so after week 3, week 4 is when you start really diving into the analytics, right? That's what I would start working you with. So you dive into the deal checklist, right? The real estate investment checklist, the capital raising checklist. These are all documents we provide our students. And the deal analyzer. It's a spreadsheet. If you've never worked with numbers, you've never worked with Excel models, it may be a little overwhelming. I can definitely see that. You just got to get used to it, and it's all a puzzle. It's all a big puzzle, right? This number impacts this number. If I change this assumption, this number changes. I put in my data here, it spits out my returns here. Once you figure that out, then you'll know how to analyze deals. You will know how to analyze a real estate investment opportunity, and you'll know what your buy box is, right? Part of this is also creating what your buy box is. What is your buy box? Your buy box is your set of parameters that you'll agree to buy a property. And you have to stick to that, because there's so many shiny objects out there, shiny, bright objects that will lead you to buy something that maybe you shouldn't buy, right? Or, and this is where it gets tricky, if you just tweak one assumption on the spreadsheet, it would, the deal would work. But that tweak of that assumption is really bad, right? You don't want to tweak that assumption. So you got to stick to your buy box, and it's usually your vintage, how old it is, what kind of returns you're looking for, what's your hold period, what's your equity multiple, what's your cash on cash return, all these things that, again, working with someone who would help you define that buy box. Like I have one of our students, he's from Dayton, Ohio. He wants to invest only in Dayton. And I love that. I think it's perfect. You want to invest locally where you can see, feel, and touch the property, right? It's hard to convince an investor to invest with you if you're investing in a deal out of state, right? Unless you're some juggernaut of a real estate investment company and you've got thousands of doors and a huge track record. So by the end of week 4, you'll have the CRM, whether it's a spreadsheet or whether it's some other paid program. You will have mastered the deal analyzer. We're going to give you pitch deck templates. We'll give you a checklist. And you will build an initial list of 20 potential investors and strategic partners in your CRM. So this is the next thing I always talk to students about. I say, go through your phone and just pick out the people that you think could invest with you. That's going to be your first line of defense, right? We're going to ask other people, and we're going to broaden our network and grow our network to attract other investors. But go through your phone and say, oh yeah, this guy, I went to high school with this guy. He's now, he just exited a company for $10 million. Yeah, he would remember me. Let me call him and let him know what I'm doing, right? This guy, this is my neighbor growing up. Actually, he's a really successful doctor. Let me call him, right? You'll be surprised who in your phone that could invest with you. And you just got to think about it that way when you're going and looking through your phone. But at the end of week 4, you're going to have at least 20 of those people to call. and you're going to put them in your CRM and you're going to call them. And again, it's not even, the call is not, hey, I got a deal, because you don't have one. The call is, hey man, I am I'm investing in, I'm a real estate investor now, or I'm investing in real estate, and I come across a lot of private real estate investment opportunities. And would you like to just stay in touch when these opportunities arise? You're very non-committal. You're not asking them for any money. You're nurturing them. You're opening the door for that conversation and that relationship. And if they say no, then fine, move on. But likely they will say yes, right? What did Wayne Gretzky say? You miss 100% of the shots you don't take. So you never know if they don't call them. So you'll have that database. Now we're going to move into phase 2. This is day 31 to 60, right? We call this the deal machine. And at this point, back in phase 1, real quick, while you're doing all of this, you're also dabbling online, looking for deals, looking on LoopNet, looking on Crexy, right? Getting a feel for what deals look like, what returns look like, we're having conversations, or have conversations with whoever is advising you about certain deals along the way. You need to live and breathe this to really make it work. It's hard to do it. You can definitely do it nights and weekends, and especially if you've got a day job and you can hustle it, but you need to live and breathe it. It's not something to do passively or part-time to really get your first deal. So the second phase, deal flow analysis, day 31 to day 60, that is when we look at potential acquisitions, right? In week 5 to 6 is when we start our outreach, because we're already positioned online, right? The first couple of weeks, first month, we've got an online presence, we've got a LinkedIn presence. Going back to LinkedIn, just having the presence is great, but you need to post on LinkedIn. You need to post on LinkedIn so that you can, again, position yourself as an expert, right? So if you're, how are people going to know that you know what you're doing if you're not posting on LinkedIn to show your expertise? And you can use research tools, use AI, use things that you can then reference and dive deeper into while online, while posting online, because that is the name of the game. Just having a LinkedIn account is great. You want to have a professional photo. You want to have a professional headline. Headline should say something like, I help high net worth investors save on taxes and generate stable passive income, because you're going to use LinkedIn as an investor retention tool, right? An investor tool to gather investor leads. And you need to post about the economy. CBRE just came out recently and said the cost of home buying is up 105%, right? What does that mean? That means it's going to lead to a nation of renters. What does that mean? It means more multifamily demand, right? Something like that, showing people that you're keyed into the market, okay? So getting back into day 31 to 60, week 5 to 6 is about broker outreach, because they can see you on LinkedIn, they can see your website, you've got a professional email address. Now you are proactively engaging with the market. You are emailing brokers. You have at least 10 brokers a week, again, to get on their buy list, to just make an introduction, let them know you're interested, get a meeting with them if you can, take them out to lunch, take them out to coffee, buy them a gift for that meeting. You want to do something that is memorable, right? And the goal is not to just make contact, but to cultivate a genuine relationship with these people. Okay, authenticity wins the day, always, because the key to off-market opportunities is getting with brokers and getting access to the off-market opportunities through on-market deals. Okay. There's also other ways, and one of our students is doing direct mailing and is going through that process to try to get off-market opportunities for mom and pop owners. That's a great strategy as well. It's time intensive. You probably should hire a VA or an assistant, but for sure, the access to off-market deals is through broker relationships and through on-market opportunities. So you want to have at least 10 or so broker contacts a week while you're in week 5 to 6, and also at least continue the investor outreach with 5 touches per week targeting business owners, high net worth individuals, friends and family that you're aware of, and you're constantly building that database, constantly building that database. Week 7 and 8 is really about underwriting mastery and due diligence. So this is where we shift from critical skill of deal analysis and to actual application, right? Because what we're going to be doing is we're going to be asking brokers for T12s and rent rolls, and we're going to be taking that data and we're going to be underwriting it. You may underwrite 20 deals, none of them work, none of them pencil out, right? But we may underwrite 20 deals and put an offer on one, put an offer on two. I just put an offer on a $7.5 million acquisition in Marietta, Georgia. After penciling it, I talked to the broker. It was on market for $8.25 million. He wants 8 for it probably. So we're about $750,000 apart right now. And it's just a game, right? They're going to come back. We're going to negotiate it. We'll see where we end up. But you need to master the underwriting and the due diligence at this point. So when I send out LOIs and I provide LOIs to my students, I will, give them a template, and that template has as an exhibit A all of the due diligence that's needed to really evaluate a property. It's not just the rent roll and T12. The rent roll is obviously the rent. It shows the income. It shows the rental amount, all of that. The T12 also shows the profits, basically the P&L. It's called trailing 12. So for the last 12 months. So not necessarily January to December, but the last 12 months. And so, but there's also things you want surveys, title reports, utility bills, tax statements, any insurance claims, any CapEx that has been done on the property, any planned CapEx, any what's called loss runs. Those are basically insurance claims. All of those things, tax returns, you may not get tax returns. Bank statements are huge. All of those things are huge due diligence items that you're going to be underwriting, and you're going to be going through these due diligence items to identify what we need and what we don't need. So at the end of phase 2, you will have about 40 conversations with brokers. This is a scorecard, right? We do all KPIs with this. 40 conversations, 50 plus deals reviewed and analyzed, potentially 2 or 3 deals for a deep dive. Now, analyzing it is you've got the data, you've got the broker's OM, you kind of do an initial underwriting and see if it fits your buy box or not. If it doesn't, you move on to the next one. If it does, then you do a deeper dive, right? 10 plus investor conversations, and then active engagement with the mentorship. That means, you're emailing your fellow mentees, your fellow students, you're looking for partnerships as well, taking an active role in this mentorship. So phase 3, this is kind of the last phase. And I work with students for at least a year, but we go through this 90-day launch plan to get them on the right track, right? And when all this is done, then your system is in place. Your system is in place, and you can go out and execute and build relationships because you've already got the train is running, right? So in phase 3, day 61 to day 90, that's where preparation meets execution, right? So we're raising capital. We're actively moving towards closing deals. We have a credible brand. We have a deal pipeline. We've got an analyzer. We've got a growing network of broker relationships. And then we're going to start submitting LOIs potentially for promising opportunities. There's a lot of other things that go into this along the way, and one of them is attending events that I want to talk about real quick. So attending events means networking events, local REIAs, right? What's a REIA? Real Estate Investment Association. Find it where you are. Go to the events. Go to the lunch and learns. Just Google it. Put it in chat. You will get a ton of opportunities to go to. In person is the best, right? And we have a whole investor script to use. Not only getting investors, but getting relationships with brokers and other strategic partners, right? You may have a deal, but you need a capital partner. We'll go to that. You may find a capital partner at this event, right? So getting yourself out there and understanding that the more hands you shake, the more money you make, right? So shake those hands, get that contact, grow your network. You've got to put yourself out there if you want to be successful in this business. So week 9 to 10 is really about, personalized and strategic outreach to potential investors identified in the CRM. refining your investor pitch, right? Kind of like your elevator pitch. How do you refine that? How do you talk to investors? I mean, and how do you talk to brokers? I remember I had one student a year or so ago where we were going to get on a call with a broker to talk about a deal, and he was like, "What do I say? I have no idea what to say." Right? And you want to sound credible, and you want to sound serious, and you want to sound like you know what you're talking about, 100%. But you may not have that skill. And if you don't have that skill, you got to work through it with somebody. So you got to practice it in the mirror. Um, you know, practice it to a point where you know how to talk to brokers, you know how to talk to investors, you know how to clearly explain your role in the deal and who you're partnering with. And then another way to grow your investor database. And one of my students did this, and it was a brilliant idea. And that was they hosted an event, their own, like an informal. Well, it was it was a dinner party, but they had a whole theme, and it was called Capital and Conversations. They're going to have another dinner party, I think, in April coming up. Capital and Conversations. And so what they did was they invited all their friends and all their colleagues and close contacts to this party, and they had a little presentation about what they're doing, what multifamily investing is like, what deals are like, and you just started the conversation, right? And it led to other relationships. It was a really good idea. Low pressure environment to build trust and demonstrate expertise. So brilliant idea. So the final couple of weeks here is about submitting LOIs. Hopefully at this point you've got investor connections and you've got some money available for the earnest money to put down. You've got some investor connections. Your mentor would hopefully have made some lender connections for you. You've identified a smaller property to buy, 10 to 50 units, and it's easy to raise capital for. It's easy to execute. And that is when you are making offers and your system is on autopilot, right? You're posting online, you're building your expertise, you're building your credibility. You've got your broker relationships, your website's popping off, and ideally you've got those capital commitments secured. Now, you may not have a deal under contract or deal under LOI in this first 90 days, but you've learned to raise capital. You've learned to have the conversation with investors. You've learned how to talk to brokers, how to find deals, how to analyze the market, how to create a buy box. And you can position yourself now as an authority in the space, wherever you are. And you use that authority to secure a commitment from investors, $100,000, $200,000. And the commitment may even be, hey, like we talked about earlier, do you want to stay in touch, right? If I find deals that sound good, do you want me to run them by you, right? All that to say is yes. That's your door. That's your opening to nurture those contacts. And that's the 90-day launch plan, guys. We've got some other checkpoints and accountability. We have the 1% better rule in our community, and that is, that systematically, when you have a system in place, you want to ensure you are moving the needle forward every week. By doing that, really every day. So what are you going to do every day that's going to move the needle for you forward to help you reach your goals, right? And then having your accountability partner, which is really your mentor, is your accountability partner, but also yourself, right? You want to have a commitment, have a weekly self review. You've got mentor check-ins, you've got work to do, and so that is how you leverage the launch plan to then go out and successfully close on your multifamily deal. So, this is how we do it. This is how we do it in Multifamily Deal Makers. And, if anyone has any questions about this, that's listening to this, feel free to get in touch with me. I'd be happy to talk to you about our program and about our strategies to help investors purchase multifamily deals, raise capital, and close on these opportunities to create financial freedom and generational wealth for themselves and for their family. So peace out. I'll see you on the flip side.